All right, let me call the meeting to order. This is a regularly scheduled meeting of the Board of Finance. We're delighted to have with us members of the Board of Selectmen, as well as our consultants from Fiducient, a new name for Chris and Tyler. Welcome. So let's begin with the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. I also should have mentioned we have members of the retirement subcommittee, I think, but that probably they were all covered by my other introduction as well. This is nice that we can have Tyler and Chris here tonight. We try to have you folks present to us a couple of times a year, and I know we had difficulty getting aboard our subcommittee meeting together, so we'll knock those both off at the same time tonight. So how would you like to proceed, Chris? We have all received the slide deck, so in the interest of time and content, do your best. Lisa chaired a meeting that we finished in under 15 minutes, and no pressure. All right.
Okay. Well, Tyler and I, well, first of all, good evening, everyone. Great to see folks and trust everyone's well. I was driving right down Route 10 yesterday morning and went by the Starbucks across from Town Hall, and it kind of looked like old times. So hopefully here we're getting back to it. We'll be tidy with our time here. We know you have a busy agenda. I don't remember, Melissa, do you want me to share? Did you share in the past? I don't remember.
I've done it in the past. If you would like me to pull it up, I'm happy to do that. Or I can give you permission to do so.
Sure, if you would, it might be just as quick to do it that way, if you don't mind, and I can direct you to a couple of pages. If we're going to just do, with respect to the pension plan and the OPEB trust, what I'd offer up as summary comments is I think we're in pretty good working order in all the asset pools. We'll show you performance through June. We'll catch you up on allocations through June. As you know, we've been working since the last time we convened on kind of sourcing from the overweight portions of all those portfolios when we need liquidity, which, as you can imagine, would be equities, and trying to stay true to our disciplines in terms of your investment policy statement and your established asset allocation targets, and have been doing that working with Amy. I think the lineups are in good shape in both the pension plans and the OPEB trust. And we'll catch you up on a couple other items as well, but I think we can be pretty quick with time here. If you, Melissa, jump ahead to, there's a little bit of governance content here just for the committee's edifications. If you keep jumping ahead, let's see, actually, we'll stop here for just a minute. I'm not going to linger on this page. I think everyone has a good handle from a market perspective what's going on. Certainly, as you know, through June, capital markets had been pretty darn resilient. All premised right on the magnitudes of stimulus and the pledges to keep those in place, on the fact that Delta variant aside, at least there'd been some progress on the reopening fronts, and financial health on the corporate front remained pretty solid, and that made for pretty good returns in the markets through the summer, and certainly more recently, as you've read. Markets are starting to climb a little bit of a wall of worry. We have the situation in China with Evergrande and some concerns around their leverage and repaying debt, a lot of debt, and whether that could have contagion effects, which is not our central premise. You've heard the Fed and other central bank authorities around the world begin to hint at pulling stimulus out of the system in a very measured manner, but pulling stimulus out of the system nonetheless. And of course, the unfortunate persistence of the Delta variant has kind of chomped down on reopening too. So markets have been a little softer near term. We still think on balance through the remainder of the year, while we're likely to see a little bit in the way of elevated volatility, that all things considered, we continue to remain cautiously constructive on thoughtful risk-taking over the next several quarters, and do think that the world is poised to continue to grow, if in a somewhat moderated fashion once we manage through some of these issues. So that's the bigger picture backdrop in terms of markets. If we jump, Melissa, ahead, there's a lot of detail and collateral here that in the interest of time, I'm going to set aside, and we'll certainly pause for questions and keep running through all of this generic collateral. And I'm going to jump right in if you move a little bit deeper into the content. We've got some of the details on the pension plans, and these are just all, again, generic returns, and you'll see how those flesh out momentarily. So let's cut to the chase here. In terms of governance, two things really to bring the boards up to speed on. This quarter, we have included the investment policy statements for pension plan in the booklet. They're in good working order from our estimation. We don't have any recommendations for changes. You're still operating in good stead with respect to those. So I think that's a quick check off our list. And then if you, Melissa, jump ahead just a couple more pages. I think it's just, there's the policy statement details itself, just kind of reaffirming that we think they're in good working order. A copy's included for the record. And then if you could just jump ahead one more page, Melissa, that's it right there. You folks do everything you should be doing as fiduciaries, right? You're meeting regularly, you're documenting things, you're having thoughtful conversations, you've got a policy statement, you're adhering to it, you're kind of testing your allocations through time and keeping up to date on all your financial circumstances, actuarially and other. You're doing everything certainly we think you should be doing as good fiduciaries, and this committee and the related committees, certainly from a governance perspective, and in our estimation, again, are following best practices. So just again, our annual affirmation of you folks doing good work. And with that, I think we're through governance. And if we could, the very next page, you'll see that Melissa's got up there. There's lots of numbers on the page, but the takeaway for the committee is that all three pension portfolios, relatively close to target. Again, and when we've needed liquidity, working with Amy on sourcing it thoughtfully from the overweight segments of the portfolios, which has been equities recently, as you know. So we're adhering again to that rebalancing discipline. And I think from a liquidity standpoint, in good working order, no issues right now with the larger asset allocation in the plans, nor with any of the underlying managers. You'll remember most recently we had eliminated Templeton Global Bond out of the fixed income portion of the program in the spring. I think we're in good working order as we come into year end here. And then from a performance standpoint, and then I promise I'll stop and give you a chance to ask questions. But if you roll ahead, Melissa, I think it should be, one more page there. Again, if folks can make the numbers out there, if you go back one page, just at the portfolio level, you see there pretty good results, right? Yeah, year to date, and then the 1 year number, if you can make it out there down in the middle of the page. My eyesight isn't as good as some of yours, but 26.4?
Other way around, 24.6.
Thank you, 24.6. And kind of nicely tracking with benchmark and kind of the longer dated numbers similarly. So I think we're kind of in good working order on the pension front, both in terms of allocations and managers, and results again have been a pretty solid. Any questions from the group before we segue over quickly and just give you a couple of data points on OPEB?
Just the net contribution, it looks to be rather large. Is that correct? Year to date is minus $2 million. Since inception, I'm assuming that since '94 is $12 million.
Yeah, that's an aggregated number, Kevin, through time, right? So that's just net flows pulled off the custody statements, the custody bank statements.
Right. I guess just 2 million year to date seems rather large relative to 12 million since 1994. And I just wasn't sure if that was for any particular reason. No?
Yeah, no, I don't think so. We could go back and research it with a little more granularity, but I don't, and Amy jump in here as well. I don't recall there being anything in the recent cash flow profile that's been all that different than what we've had in the past, but we could check it.
Yeah, no, there's been nothing that was outstanding. It's all been consistent.
Well, we'll look, Kevin, into that number for you. You know, we'll share some perspective back to the group.
All right, thank you.
Any, Lisa?
Yeah, thank you. If you could turn to page 14.
Sure.
Could you just give a narrative? If you look at the actuarial value of the assets from 2020 to 2019, it looks like we've lost value. I'm assuming that's because of payouts and retirements, but I was wondering if you had any narrative insight into that number.
Yeah, you know what? I have to confess, Lisa, that we kind of in a summary fashion pull this information from the Milliman report. I wonder, Amy, I would defer to the Milliman folks to get you that color. In all fairness, so I wouldn't even fashion a guess there, but again, we can pose the question for you and get you details back.
Yeah, so one thing, I don't know, Amy, if you keep these stats, but it would be helpful to see during these reports, because I know it's not you because you do the investments, Chris, but for the town, what the investments are over the year versus what the expenses are, what we're paying out for retirements. It would be useful to sort of see that over time. That's all I had.
Yep, we can help Amy and work with the Milliman folks too to create an exhibit for you.
Yeah, I can reach out to Jen. She probably has that like offhand.
Chris, what do you like as a funded ratio? I mean, we're down, what, 6 points?
Yeah, and again, Art, I would defer really to the actuaries there. I think that they would tell you, right, that there's not a hard and fast rule of thumb for funded ratio. I think actuarial circumstances dictate slightly different levels across the state. I have heard, and I'm not an actuary, right, but I have heard, you know, funded ratios in the 70 and 80% ranges are considered healthy, right, all things considered. And that certainly from what everything I have a transmission from the folks at Milliman with regards to your plans is that they're in pretty good working order and you compare on balance favorably with your peers around the state. So I don't know, Art, that there's a number to point to say that's healthy, that's not, but you folks are fairly ambitious, right, with your actuarial return assumption, right? You've been conservative with that and challenging that regularly. So that has a little bit of an influence there as well. But I think, you know, you're in the 70% range and then some depending on the plan. And I think you're in pretty good working order. Again, Jen would probably give you a more elegant answer than that.
Chris, just as a manager, at what level would you be concerned? I mean, when it say 50, 60, what number, if you saw on there, would you say we've got to look into this?
Yeah, I mean, I think that we do a lot of work across the state, as you all know, with pension plans. So we certainly see a lot of this data. We work with some plans, Art, that are in the mid 40s and 50% funded ratio ranges, and those are certainly on the lower tier of the averages that we see and work with. I think your numbers again trend favorably versus those broader averages, and I would defer to the actuaries again with apologies, but you know, a funded ratio, I suppose, below 50% probably raises eyebrows, I would imagine, right? All things equal.
Thank you.
Yeah, I think it's a matter of you know, making sure you're comparing apples to apples. It all has to do with the return assumption. You know, along those lines. Sorry, Art. Yeah, sorry if you have a follow up there. I mean. Yeah, Mike, I was going to just ask you about inflation, kind of what your house view is there in relation to, you know, more fixed income type products being able to achieve, or more conservative products being able to achieve kind of that 675, and then certainly where you think, you know, rates are going. I'm hearing lower rates for longer. But I think inflation probably has probably potentially changes that a little bit. Didn't know what your thoughts were there.
A great question, Derek. So I'll try to piecemeal the answer as best I can. I think, as you all know, just to preview, as we come into year end, we will be dusting off our capital market inputs, and you'll all remember that we formally retest all your portfolios and the return potential based on your strategic targets as we come into year end and in the new year. So we'll certainly share all that latest update with you. We have, Derek, kind of accepted, I think, the House view, which is our House view, I should say, which kind of parallels the Fed view, that some of these supply chain challenges and the like that we've got right now, which is spiked, somewhat elevated inflation, are likely transitory. And on a go-forward basis, while we'll indeed have a touch higher inflation than we saw at the onset of the pandemic, it won't rise to the levels that would serve to kind of derail this recovery that we still think has some room to take hold. So I think internally we're thinking something like 2.25%, maybe 2.5% of the run rate for inflation. Just to give you, some guidance around that, which would be more a typical right of what we've seen historically until we had that stubbornly low numbers up into the pandemic's onset. And then the other challenge, like you point out and allude to, right, the 10-year Treasury yields at 1.3%. That's a pretty good guidepost broadly, right, for the return potential for fixed income. And that certainly presents challenges in a balanced portfolio when you've got, upwards of 30%, a third of your portfolio in those type of securities. The managers that you folks have deployed on your behalf, as you all know, have some wherewithal to kind of thoughtfully take risk away from those low base rates. But all things equal, that's going to continue to be something that we're going to need to be mindful of. And again, we're going to bring some of that perspective to you and kind of a more an elaborate fashion, for lack of a better term, as we update all those capital market inputs. And the numbers that we've all looked at, right? Low base rates, the fact that we've had a pretty good run in capital market returns on the equity front are the background, right, for all the challenges, conversations that you folks have had around return assumptions, right? And that's why they've continued to come down through time. And there still seems to be a little bit pressure on those 675s, for example, and where they end. Again, the actuaries can give us some color there, but you're certainly getting closer to that landing spot, we think. But listen, challenges abound, right? So we just need to be kind of mindful of those and creative on the margin here. And you've got good, thoughtful managers, as you all know, up and down your rosters and pension roster, and they're bringing some of that perspective and looking for those incremental returns, obviously, on your behalf as well.
Thank you very much. That was a great response. Thanks.
So I do want to be sensitive to time, and I know Tyler has some information too. I might just, Melissa, very quickly, for the benefit of kind of closing the loop here, if you work a little bit deeper in the deck, just to show the group the OPEB, so you see it as of the end of So there's the portfolio at the end of June, about $22 million of invested assets, pretty closely aligned. You can see their actual allocations with target. Again, all indexed as the committee's desire. And from an allocation perspective, again, we think, by and large in good working order and kind of consistent with the objectives that you have for the asset pool. If you jump ahead to the performance page, Melissa, right after this one, you can see there numbers again, pretty healthy numbers again, right? Certainly in an absolute sense. And you see the big 1 year number and reasonable numbers longer term as well. Again, these are in all indexed programs. So, that comparative is a little bit different, but nonetheless, certainly year over year, nice returns on an annualized basis for this program. So there's no further recommendations for the group this evening. But happy to take questions on OPEB Trust as well, if you have any. Doesn't look, Mr. Chairman, like there are any, so.
Let's move on. Great.
Great. Well, thanks, folks, for the good questions, and I'll turn things over to Tyler to catch you up on the defined contribution program.
Hello, everyone. Melissa, if you want to go to the next page, I'll start on this page here. This is our second quarter, so it's a good opportunity for us to take a look at some of those. We call it our investment focused quarter. We're always looking at the investments, but it's a good opportunity for us to take a look at the unique investment asset classes that are out there, and then just make sure we're offering the right types of investment options for the town staff. So if you want to move a couple pages, to page 30, the next page should be 39. That's perfect. I'm sorry. I'll go with the page number on the bottom corner, Melissa. That's perfect. What I'd like to show here is we use the Plan Sponsor Council of America's benchmarking for the different asset classes. And we're using the 401k. They do 401ks, 403bs. I think 401ks is a good indicator on what's going on in the markets. And so what this shows you is in red represent the investments that you currently offer, the types of investments you currently offer employees of the town. And in blue, light blue are plans in similar size. Dark blue are sort of plans in the industry. And what you'll note here is, you're offering the types of asset classes like, active bond manager, like U.S. equity active, like international equity active. You're offering the right types of funds that we're typically seeing in the marketplace. Where you'd see the minority of plans being offered, say, sector-based funds or a self-directed brokerage window or target risk or life cycle investment or lifestyle, funds. But you can see you're offering, particularly if you look at the dark blue bar, that's representative of all 401k plans. You're offering the different asset classes that are north of 50%. So the right types of funds that are being offered to employees. I did a brief write-up on the next page on sort of industry trends. For purposes of time, I'll skip to page 41. So just a reminder, we utilize the target date funds, the T. Rowe Price target date funds for the default investment option. It doesn't have as much. In a few plans, it's a large majority. I think in majority or a bulk of the plan, it represents about 20% of the overall assets. But just a reminder of how target date funds work. There's a decrease in equity, an increase in bond as someone ages or approaches retirement. The concept obviously is that further away from retirement, you can take on that risk. As you approach that retirement date, you have a larger balance, and of course, may not be able to withhold that volatility as you get to potentially start drawing on the assets. We put together page 44, a write-up. This is all done in-house. A write-up on how T. Rowe Price works. We use the T. Rowe Price retirement funds as the target date fund manager. Again, I won't go through each thing, but launched one of the earlier adopters to the target date funds, along with Vanguard and Fidelity, kind of represent the larger three target date fund managers. They were the managers that we had prior to the move to ICMA, and we do still believe strongly in their what's called glide path, the decrease in stocks and increase in bonds. And in the bottom chart, and I apologize if it's hard to read there, but you can see a little bit of the makeup of every target date fund that represents the different age groups. You can see early on much more large cap, mid cap stocks, small cap, emerging markets, international, and then as you get to retirement, they phase that out and introduce more inflation protected and real estate and investment grade fixed income, both U.S. and non-U.S. as well as cash. So you can see over time it evolves, not only just the equity, but within equity, the different risk assets that are a part of the portfolio. Now, again, they did just bump up the equity position recently, further away from retirement and further beyond retirement. The interesting thing about that is they, to create a glide path like this, that they're all the target date fund managers are building around an assumption at retirement that you're going to replace, say, 75% of your final year's pay throughout retirement, utilizing this portfolio as well as, say, a Social Security. And so the data that goes into this is mortality table. It's how people retire, when they retire, how do they save, employer contributions, outside pensions, a lot of things that go into that build out the target date funds glide path. And what happened to T. Rowe Price is they looked at their data from 2002 and realized the mortality table shifted 2 years, so people were living longer. And so there's a longevity concern there, and therefore you take on a little bit more risk. The other challenge was people weren't saving enough. They initially thought people were saving up to 15%, both employer and employee dollars, and reality is just closer to about 12.5. And finally, if people's behavior was to move in and out of these type of vehicles with fluctuations in capital markets, it would defeat the purpose of having it. And what they found is, even in periods of capital market volatility, people aren't moving in and out as they invest in target date funds. So, for the most part, if you see and look at the next few pages, it shows you kind of how the T. Rowe Price glide path compares to the industry. As I mentioned, takes on a little bit more equity risk. But if you look on the next page, it's getting and so this is just a measurement of volatility to the right and return on the vertical axis, and the cross section is the average of all target date funds. So, what's apparent here is that the T. Rowe Price target date fund managed series is a little bit more volatile, but gets you that added return above and beyond what the average target date fund is doing. So I'll go into that when we get to performance, but I think this is a good way to take a step back and say, okay, we're still very confident in T. Rowe Price as a target date fund manager. Why we go through this in a little bit more detail once a year is because it is so unique. It does go a lot of different data points. It's not as simple as just a large growth manager or an index investment option. Any questions on the target date funds? Without any questions, starting on 49, and I won't go through each of these slides here, but we did include information around the stable value investment option compared to, say, a money market. The plan historically was known to have not a money market, but a stable value vehicle or a fixed vehicle. And we put some information starting on 52 through 53 around the ICMA Vantage Point Plus Stable Value Fund. And I apologize, I didn't say this prior, but just a reminder, ICMA, if you hear the name Mission Square, they are rebranding to Mission Square. So the ICMA name is what we know, but they're moving towards the Mission Square name. So if you do hear it, it's the same company, but we did provide some information around how the stable value option works. Again, the sector breakdown within their general account, the crediting rate or historic crediting rate, as well as the insurance providers that help provide for that that added rate above and beyond what you're currently getting from a money market fund. The balances start on 54. So you can see we are approaching right around 15.6 million on the 457 plan. Again, why you see 2 quarters is because we're 2 quarters into the new portfolio with ICMA or Mission Square now. But you get an idea of where the balances are. 20% in the plus fund, 24% in the S&P 500, and 18% in the target date funds. Those typically represent the largest pools. The stable, the S&P, and the target date funds. So that's right in line. I know we typically see more in the target date funds, but I just don't think they've been around as much as, say, some of the other older investment options. If you look at the 401A plan on page 55, you can see the growth there, up to about 630 million. Excuse me, 630,000. Apologies for that. And then more obviously, because that's the newer plan, more in the target date funds, representing roughly 80% of the overall pool. And then finally, the Board of Ed plan on 56, up from 825 to 900,000 over the last or at end of June. Similar in structure, a little bit more weighted on the plus fund. Again, during our next meeting, we can take a deeper dive into some of the demographic information around how people are investing and why the Board of Ed plan is slightly more skewed towards that plus fund. The starting on 57 is the performance of the target date funds. As you'll note, and just a reminder of how you read this, it's performance net of fees on a quarter, 1 year, and annualized on a 3, 5, and 10 year. You can see the expense ratio there, and then our internal status, maintain, watch, or terminate. The index below it is the index it compares itself to based on its glide path, and then color coded below is that is the peer ranking, 1 being the best, 100 being the worst. And so you can see the T. Rowe Price target date funds, given its higher equity position, have done fairly well versus peers. Top decile, top performing fund, pretty much across a bulk of the vintages, and of course all of this is net of fees. If you go to 59, Melissa, we get into the core menu. I think Chris touched on a lot of this, but all the funds are on maintain. We don't recommend any changes to the defined contribution plan, and we sort of carry on onto page 60 and 61 is the rest of the performance. So I'll pause there to see if there's any questions or comments around the managers or target date funds.
Overall, you've been pleased with the move to ICMA?
From an investment and investment flexibility and then cost standpoint, I would say yes. Again, I pose it to HR if there's been any comments or questions around the transition, but it went really smooth. From my experience, the fees are very low compared to where they were previously. We don't have that. Probably we don't have the 4% that was the sort of biggest issue previously, but again, Mass Mutual went to Empower, so obviously that branding changed. Empower recently bought Prudential, so Empower continues to grow, and obviously that may be stressed from a capacity standpoint. So I think it's been good from a town standpoint in my eyes.
All right, thank you. Anything else for Tyler or Chris? From our board, the retirement board, others? Well, thank you for all of this. We appreciate it and glad we could get together tonight.
Great,
right.
thank you, folks, and enjoy the fall. And if you need any follow-up, obviously track us down, but enjoy your evening and the rest of your meeting.
Thanks a lot.
Bye, folks.
All right, moving on. Next agenda item is presentation of the Arpa work group. And I know that we have Wendy and Sean and others, so I'm not sure who's going to present this, Wendy or Sean.
Melissa's going to kick it off. We're going to go through what we did on August 9th with our team, but allow for conversation with you guys.
Okay.
I'm going to do the first few slides and then I will turn it over to the work group. So I'm just going to do like the quick overview, high level. Melissa, if you want to, yeah, thanks. So some of this is a little repetitive, but as you know, Simsbury is anticipated to receive about $7.5 million. We've already received $3.7 million back in June of 2021, and the rest we're going to get in June of 2022. So the funds have to be incurred by December 31st, 2024, and then they have to be expended by 2026, by the end of December. So as you're aware, you guys approved a special revenue fund to put this money into. Investment interest will be allocated to this fund. This work group did express an interest in keeping the investment interest with this fund to be utilized for the intended purpose. Under the Arpa guidelines, we actually do not have to use it for the intended purpose. We are not stipulated to use the investment income under the Arpa guidance. We can actually use that as our regular general fund money. The appropriations will be approved by the Board of Selectmen once the projects are identified by the work group and then subsequently by the Board of Finance. The annual reporting requirements start this fall. We have our first reporting due in October, and that will be on an annual basis since we are a non-entitlement community. And then we have to have our expenditures. We have to track them in accordance with the U.S. Treasury guidance. And specifically, that means grants to sub-recipients. We are actually responsible for how they spend their money. So even though they might fill out an application, we may approve it, we actually have to get reporting documentation for that from them that they're spending the dollars like they said that they were going to. And that is the town's responsibility. We won't go out and audit the individual grantees. We will be penalized for any misuse of those funds. Melissa, the next slide. So just some high level regarding the eligibility. This guidance comes directly from the federal government, the U.S. Department of Treasury. Right now, we're under the interim guidance. The final guidance has not been issued yet. We are expecting it anytime now. They were receiving comments from different towns, I believe, in July, and then they're supposed to issue the final guidance. So as of right now, we're still under the interim. So basically, there's four general categories that are eligible. The first is responding to the pandemic or its negative economic impact. So these are things like vaccine campaigns, behavioral health services, ventilation improvements, things of that nature. Premium pay for those that work during the pandemic, revenue loss, and then any infrastructure improvements to water, sewer, or broadband. Things that we are not allowed to use the money for, rainy day funds or reserves. We cannot make any deposits into any pension funds. And then we can't offset any net tax revenue, and we cannot use it as a match for federal funding. There are eligible uses that are in the guidance, but Simsbury does not qualify. So there are certain infrastructure projects around housing where they would automatically qualify if we were in what they call a qualified census tract. There is no part of Simsbury that is part of that qualified census tract. Therefore, we do not meet those requirements. And then under the revenue loss, this is a calculation that I had done when they came out. And unfortunately, based on their guidance and their growth numbers, et cetera, we do not meet that. We do not meet that threshold. And therefore, we do not qualify for revenue loss.
Questions at the end or as we go, Rob?
I would say as we go. It's up to you guys.
That's fine.
Yeah, so I have a question. I know we're not part of the qualified census tract, but they do have another category in there. If a certain area is like 60% of the median income, which for us would be about 72,000. And I was wondering if we have pockets in town that might qualify, even though we aren't part of the census tract, whether we thought about that.
So we'd have to prove it, and something along those lines, I wouldn't be comfortable making that judgment call. I would probably go back to our representative on the Fed side or CCM to get approval for that. We were on a call a few weeks ago. Maybe it was a couple weeks ago. We had a representative from CCM, and there was one town that said that as part of air quality and ventilation, they wanted to replace their carpeting and get rid of the carpeting and do flooring. And they said no. So, I mean, they're being quite literal with the guidance. So something like that, I mean, open to it, but I would probably seek further guidance on it.
Second question, follow up on what you were saying on the subgroups. If we give money to other groups, does that, obviously there's a risk in doing that. Are they meeting it? And are we developing risk criteria for them, like prior experience managing federal funds, previous audits, personnel? Do they have policies and procedures in place? And do they have the capacity to handle the money? So I don't know.
So that's something that the work group is going to have to consider as part of their process.
Okay.
Could you repeat that, Lisa? I missed your question on that.
Yeah, my question.
Lisa, be sure you're close to your microphone. It's usually hard to hear you. Thank you.
Sorry. I was asking about evaluating subrecipients' risk of noncompliance. As Amy mentioned, if you give to a recipient, a subrecipient, they have to meet the requirements of Arpa, but the town is the entity that has to ensure that they are. And so we are taking on a risk in doing that. And I can't remember where I read this. I read this in the federal guidance. They talk about establishing risk of noncompliance for each applicant. And some of the categories, I can give those to you after the meeting that they have listed. But those are things you might want to consider if you're going to go to non-town or school recipients, because that is a risk for the town. And there are, one obvious risk is, do they have the capacity to handle that kind of fund? Have they ever done reporting? Have they had audits? Do they have the personnel? Do they have process and procedures in place? And who's going to monitor it in there? And record maintenance and retention, do they have the capacity to do that? So that's kind of a big lift if you're going to go non-town.
Yeah, it's really going to be interesting to see how we tackle that, because we're talking about really small chunks of money here for small nonprofits and small businesses. And, I assume the answer is no, they haven't dealt with that kind of policies and procedures, because we're talking about 5 and 10s and maybe $20,000 chunks at most here. We're not talking about hundreds of thousands of dollars going to one organization necessarily. So it's going to be interesting how we evaluate and weigh that with the reality of, we have to help our community, but I'll be honest with you, this program is structured to make it really, really hard to help people. It's been a challenge as we work through it.
No, absolutely. And that's just something that sort of triggered me, because we're the risk group.
Yeah.
Yep.
Well, it just begs the question whether we're going to even be able to deploy this amount of capital. If you're talking 10, 20 grand per small business, or, we're going to have $7 million that we're going to account for that I don't even know if we'll spend. What do we do with the money in the meantime? Where does it sit? Does it earn anything, or, what the $3 million that we have right now, none of that's been allocated, or has it?
No.
No,
Yeah.
it's been allocated, but it is making investment income.
Mhm.
And we're not paying interest on this. Is that correct?
Right.
Or we are? Okay.
No.
Some of those questions are answered further in the report, so maybe we should just keep going. But before we do that, maybe just for everybody's benefit, who's on the working group, and is it intended to expand it, or how's that work? Just for everybody's work.
I'll take that question. So we started on June 14th when it was suggested at our meeting that we form a ARPA work group. And Sean and I were volunteers for that committee. And we've met a few times since then. And Jackie Bados has been very interested in what we're doing. And at our last meeting on the 14th, she was made an official, our last Board of Selectmen meeting, she was made an official member of the work group. So we have the three of us. We have Amy and Melissa as our town membership and support. We've met about 5 times. And we're trying to work through everything that's going on, with this, and trying to learn what's going on and stick with the guidance, and start at a small place, which is the kind of the 501c area. But I did want to stop at this slide because this seems very relevant to the finance group. One of the first things that we did was, given the amount of money, was look at what we have on our CIP and CNR, in the current year and even out 6 years, to see if there was any items on there that would qualify under the ARPA rules, the strict rules, that we could use the money for that, and then it would free up the capacity. And Melissa did a lot of digging and research and came up with, this is the list after going through the facilities master plan, the school facilities plan, I believe the Parks and Rec plan, on the items that meet the qualifications according to what Amy has from the federal guidance. And Amy's presented an example where a town like Southington, I think it's Amy, that they had large capital items, so they right away just use the money for those. Is that the right town?
That was actually Melissa that had that information.
Okay.
Yeah, that was just an example of one of the towns that's exclusively using their funds for capital. That was their decision to go through and look for capital items they have that would qualify for ARPA funding, and that's how they're going to utilize the funds.
Just to further dive in on that, the capital items are HVAC, right? I mean, that's basically what the capital items have been from the other municipalities.
Yeah. So we have a couple CNR items that would qualify, and then a lot of the HVAC and AC are tied into the facilities master plan. So a lot of that is going to be done as the building project happens, which may or may not be able to be pulled out of that project. And I believe the same was true for the facilities and master plan. And most of these are in out years. So it's still something to consider, but this is where these items lie.
So follow up, Wendy?
Yep.
Thank you for looking at all those plans. As you know, that was important to me.
Yep.
I appreciate that you guys took a look. One thing I was wondering if you considered as well, because some of the categories say you can use it for economic development, infrastructure improvements to encourage economic development, and would painting the bridge at the Flower Bridge be considered not here, but as part of tourism, because it would promote people? That's our biggest tourist attraction, some might say. Could you put it in a category like that? Or are you thinking like street facades and street lights and sidewalks for economic development? How are you thinking about those?
Well, we've thrown that one out there. We also talked, there are small things we can do, and then there's the big ticket items like building a community center for $7.5 million versus $9 million. But then if it doesn't qualify, if the guidance doesn't change, then we're in a tight situation because we spent that money, and we'd have to prove either the loss in tourism or the need, to the healthcare of the residents. So those kind of come back to, I believe, to Amy, and how we're looking to Amy to lead us on the guidance so we don't get hurt later on. So we do look at those, and as we go through these, I think we're going to bring back some of these items, because when the town started with this, Maria and the town staff put together, nice to haves that qualified as yes, no, maybe. They reached out to the Board of Selectmen, and we added a few of those, and that's there on the back burner. And I believe as we progress, we will pull those out of that back burner and see what kind of ranking there is, what's the chance that it would qualify, would people be interested in doing that? So we're not there yet at the specific project items. But one thing I do want to add to what Rob asked, we do have some advisors, which we'll get to later, that we plan to bring in, including you and Lisa, to help us work through a lot of these, ideas and projects.
Well,
and I just want to say one more thing, at least. And then one thing we also did was, Melissa, we looked at the items we pulled off of the capital plan also, to see if any of those would qualify. And right now, those do not qualify, again, unless we go to this proof of loss situation.
My question, I guess, a follow-up to something Amy said, to consult with the federal delegation. Each of our federal delegation has a liaison with Treasury who may be able to advise or help assist in evaluating whether a project qualifies. It's something to think about.
It's interesting you mentioned that, because I believe Chris Peterson asked Chris Murphy himself, and with the challenges, and Chris Murphy's response was, if we can't spend it, just give it back. So it's interesting the mentality at the elected level on the pennies from heaven that we were given here. But yeah, at least we should connect with the legislative aides who are more connected with the nuts and bolts of this.
Yeah, recommend Congress, because sometimes they're a little bit more attuned with their local government than a senator.
Yeah, Lisa, I did ask Dick Blumenthal when he was at the PAC too, when we were talking about the PAC, actually, the shuttered venues. And he did offer help. So they are offering the help out there for when we can get to them.
Interesting.
Yeah. Any more conversations around capital?
Just to go back, just to clarify, Amy, for you on the eligible uses, my understanding was the investments in infrastructure was surrounding water, sewer plant, and then broadband. Because Lisa, you and I have both shared a passion for trying to fund the infrastructure fund and the improvement fund, and it doesn't appear that that's necessarily going to be a possibility here, right, Amy? As we look.
Yeah, so under the eligibility requirements, it's like you said, water, sewer, and broadband. It's only if you replace current, although there wasn't much of it, if you could find current HVAC projects that you can do and then offset some of the debt. That would be the only way.
But some of that infrastructure, that's the three that they identify, but there are other things you can do for economic development that are actually infrastructure. They talked about frontages, patios for businesses, stuff like that. So there are other ways to do infrastructure that aren't in the three categories because they need economic development, tourism, or something like that. But to Amy's point, it's difficult. The information out there, I think I agree with Amy, is a little fuzzy. So it makes it a little bit difficult, but I would just encourage you to think broadly and not just think of infrastructure at the three, because if you do infrastructure for economic development, that might qualify under economic development or it might qualify under tourism.
Yeah, and I think I'm sorry, Amy, go ahead.
No, I was just going to say, if you're talking about business facades and stuff like that, then that would probably be something that would be anticipated to be a grant to a business to help them out. And they would have to show basically the need. So we need to prove these things. There was one piece in the slide where it says maybe, and we have to specifically show what COVID did to us. We have to prove what it did to us. And then we have to show what is this going to do to remedy that situation that COVID caused. And they are very clear on that in the guidance. You can't just say, oh, we want to create tourism, so we're going to put a lot of extra signage so that people know where to go and explore the businesses. We have to show that loss in tourism or that need that COVID created and how we're going to fix that need.
Yeah, and that's, again, that's one of the challenging things as we've talked about. And, Wendy, you and I have gone deep on, we really want to help the people in this town. But again, we can't, for an example, we can't put $500,000 into a food security fund and have the folks at social services manage that over a 20-year period, for our residents that are suffering from food insecurity. It's not something that we can do here, which again makes me scratch my head. But a conversation we want to have later on with you guys is if we do some of these projects, is that something that we can collaborate as a board to fund something like that collectively? So we would, offset with an AC project and put a couple $100,000 into a food insecurity fund to follow the spirit of what we saw our residents suffer with through COVID, or other funds like that. That's just an example. And the other piece here is we're being very sensitive to not just think up a bunch of we like projects, a bunch of things that would be cool, just to spend money because we have it. We're trying to stick to the principles of if we need this investment in our community, then that's something we should find a way to fund here if it's permissible, but not just creating a bunch of stuff to have projects because we have money. We want to be, thoughtful about this under the same fiscal guidance that we come to you guys with on projects. So.
Great. And one of the things to think about and that I was wondering about is how do you determine the needs, what data and metrics, and then how are you going to measure the success of the program?
Yep.
And, just encourage hard data and measurements to the extent we can. But I agree with you, if you can free up capacity in our bonded thing, it gives you more options to do something later outside Arpa. So I think that's smart to look at that as an option as well.
Yeah.
My eyes get drawn to the school facilities master plan and the town facilities master plan. I mean, obviously each one of those, the schools and all our public buildings need heating, ventilation, and air conditioning. So, as a project cost related to, let's say, Latimer Lane, there's the basic HVAC that you need to, under code to put into that building. And then there's a better level, higher level, more airflow, more filtration level that, we could, put in there that obviously is at a higher cost. So I'm guessing that, maybe we could recoup the cost of that, that better air handling system, something like that. My mind also goes to the food programs. I know we have to spend the money anyway, but if there's any way to possibly recoup any of the meals that were given over the time that, the schools were closed. So, I mean, we can all come up with, I think, a ton of different projects, whether they, actually would, meet the program details. But I think it just, and I'll stop after this, I think it's going to be very difficult, to Lisa's earlier comments, I'm also sensitive to picking, winners and losers for funds, although I think there's plenty to go around. Just administering the application process and deciding who qualifies and who does not. I think I would focus first and foremost on municipal level and Board of Ed.
Thank you.
So I just wanted to say one quick thing, because Derek touched on a subject that's super sensitive to me, that Board of Ed cafeteria losses. That is something that so many school districts have struggled with. And I actually put those losses in with our revenue calculation to see if we could recoup some. Even though the town did better on the revenue side, I offset with the losses in those funds because they were so drastic. And unfortunately, we still didn't qualify. But one small piece of good news is that the first 3 months of the pandemic, March through June, we are getting a reimbursement. So I'm hoping that there will be another wave for the other school year where we haven't seen anything yet. So just a quick update on that. And I'll actually touch on that when I present year-end results.
Great, thanks.
And just following up on what Derek said, I agree with Derek in terms of looking at capital, and actually recommend that the town adopt and follow the GFO guiding principles, which talk about being cautious about non-recurring expenditures, investment in critical infrastructure, taking your time, using other dedicated grants and programs first, and to fill the gaps, and to analyze alternatives. A lot of people are saying it's really important that we show what we're doing for accountability and transparency. So I would encourage that we put a dashboard on our website somewhere. Denver has a really good one if you're looking for a model. So, but if we could, at some point, I hope you guys will consider adopting the GFOA guiding principles, or if you amend it in some way to your liking. But it's a nice place to start.
Yeah, and I'll take a look at those, Lisa. I mean, at the end of the day, we're not in a race to spend the money. I think, Wendy and I, and with Jackie's help, we've talked about this. We want to get this process right. We want it to be defensible. Obviously, Amy has to sign off on all these expenditures. We have to bring them through you guys. We're taking this very seriously, and we're not in a race to spend this money. We've got time to do it right. We certainly want to help the community. And again, I think Wendy's going to go through the 501c3 and perhaps the small businesses. And we'll discuss if there is any business, if there is any risk we can take in that space, given the small numbers, et cetera. And I get that we've got to have accountability. We've got to have a repeatable process. We've looked at applications. Wendy had a great idea of, can we lean on another organization that does grant making to help advise us, on this? Could we even turn the responsibility over to them with an account? So Wendy's brought up some really good ideas in that space. So, but we're taking our time to make sure that we do it right, so that we don't have a whoops and we have to pay for this down the road.
And that's why we're here asking for your guidance and having this conversation.
Yep.
So we can go to the next slide, because we took the main items, the priority items, and we all pretty much agreed on the key places that we want to focus on. Which is the broadband, improving broadband, looking at the nonprofits, using money for economic recovery, and then the Simsbury focus items, some of the things from the list. I didn't include we don't have the capital items on here, but those are obviously being included. And so we kind of struck down the premium pay. Revenue replacement I don't think we qualified for that. And then we also didn't qualify according to the guidance for number 3 because we're not a qualified census tract. And we could go to the next page. And so as we're here, we are looking for people as we get into certain areas of discussion. So the Board of Finance, Lisa, you've done a lot of homework and research, which we really would appreciate, having shared. And Rob, you're welcome to share, your thoughts on all of this too. But we talked about reaching out to people from the Board of Ed as kind of a stakeholder advisory. Main Street, Sarah Nielsen has some ideas about downtown and would like to present some ideas. We've talked about reaching out to Terriffill Village. So these are part of our next steps. We're not exactly sure the communication strategy here yet, but we do want to make it known that we want feedback from certain stakeholders, that we're not working in a vacuum.
Yeah, and to further that, originally, I think we had an intention before we got the guidance of kind of, hey, send us your ideas. And as we've all learned here and talked about, a lot tonight, folks' ideas are not necessarily what we're able to pay for. So again, we do want a fresh perspective, but again, the parameters are pretty narrow here. So what we're trying to use with these stakeholders is for the business community, when we're able to craft the proposal, the application, what are the types of information that you have? What are the types of problems you had? So we can craft the process in the right way so they can give us the information we need to be comfortable that they've suffered the loss that the government requires us to prove. Amy can audit to it, understand it, and then ultimately sign off on that expenditure or grant, excuse me. And the same with the nonprofits. So really just trying to make this a less than arduous process for the folks that are already hurting and already impacted by COVID, so that we can, if we're able to get dollars into their hands to help the folks, that they serve. We've got some relationships, the Interval House is one that the town already gives money to. Are we able to up that contribution to the Interval House? Because obviously they do great work in our community. Obviously we would need the funds to be benefiting Simsbury residents predominantly. But they've already got a lot of data as an example of how they've been able to help residents as, they do that presentation for us. So that might be an example where, we are able to get some of this money into a 501c3 that does something that qualifies for the benefit of our residents under this program. So. Wendy, what else do we have?
Well, yeah, let's go to the next slide, because this is all the stuff that we have left to do. Yep. So we realize how big this is. And, that's why we brought Jackie on, and we're trying to move forward. But there's a lot of information out there. Multiple towns are just moving forward with, using this for tourism, this, and this. And then we have the capital users. So there's a lot out there that we can use to process, and find, not recreate the wheel. But we're still in the step trying to define our process and steps. And we were going to wait till after we met here and take back a lot of the ideas from this group. Looking into what peer towns are doing, like we talked about, also the feds, what kind of advice and input we could have. CCM has a advisory, I forgot what it's called. It tells you what they're doing, and it has a list of people that are first selectmen, that are GFOA people, that are there for guidance to turn to, and they put together a manual on that. I think we have the link attached at the bottom. We've talked about, creating a ranking system of how something meets the criteria and will it qualify. And then one of the things that we've been moving on, more focusing on, just to do something tangible, is the 501Cs, the charities that normally come to us at budget time, and to see if we can allot some money now where that they can, and there's an application process that's being worked on where they can, demonstrate the need. I don't have the thing in front of me right now, but it's evolving, what we would have them fill out for us. And then we would administer either small amounts or larger amounts that would come back to the Board of Selectmen, and kind of looking at that first as a time sensitive need, just like the COVID, health response. If there's a time sensitive need where we can use money for that, we can do that now. But then the bigger projects or the townwide projects, there's no rush to get to those. So feedback is welcome.
Yeah, not to, play scare tactics or anything, but we really don't know necessarily what's to come over the next few months. I mean,
Yep.
Obviously the Delta variant is still out there, and we don't know if there'll be more money coming or not. So I appreciate kind of that design. We don't feel the need to hurry here, which I think is we can be patient and
Well, that's a good point, Derek, because we talked also about too, right, with Delta, and if there is vaccine mandates for businesses or the town or others, what money of this could be used for that if there's, take home testing or vaccinations. So we do have that money available for those things as they come up. I'm not sure, is there another slide here?
I mean, there's the appendix, right? But
Okay.
Yeah, I think it's just the appendix there.
Okay, thank you. And these are good, high level links. This is the advisory toolkit was one that has a huge list of resources within the state.
One question I had for you guys, I know the ARPA, what other sort of federal monies are you looking at? Because it's not just the money the town received. There are other pools of money out there, like for libraries, for performing arts centers. Are we exploring other things that might help our local businesses or nonprofits as well? You don't have to answer that at this point, but there's a whole other pool of money. Baker Tilly actually lists them, and I can get those to you. So it might be worth looking at those because that's an additional pool of money beyond the 7.5. And the second point I just wanted to make in terms of who you're reaching out to stakeholders, one of the things the Treasury really emphasized is equity and how we communicate with people and how we reach out to people. And they made the point that reaching out in normal ways, maybe we need to expand that so that we're reaching groups whose voices haven't been heard before.
Mhm.
So that's something to think about as well.
No, that's a great point. Yeah, I mean, we need to make sure that we capture all the organizations and businesses that if we can come up with the structure and are comfortable with it, we can make sure we get the money in their hands appropriately. And then, Eric and then Maria and I actually last night, right, Eric, we talked about one of those additional pools of money for as an avenue potentially to explore for a grant for perhaps the Performing Arts Center for some of their capital needs as well. So that something we actually talked about last night, Lisa. So thank you for bringing that up as well.
Okay, appreciate all your hard work initially, and I know there'll be a lot more to do.
Yep.
Can't wait to help, and I know as we go forward, there'll be plenty for everybody to do. So appreciate the intro, and I know we'll have lots more meetings on this topic.
Absolutely. Thanks for having us tonight. And again, questions offline or whatever, just email us. And again, we have the working group basically every week, right, Wendy? So every other week.
Every other week.
week.
We're working on getting a steady schedule.
So, but thanks for having us tonight, guys.
Thank you.
Thank you.
Okay, thanks a lot. So let's move ahead on our agenda.
Thanks,
The next item is a supplemental appropriation request for the building division. Who's going to present this?
This is Henry Miga, the building official. If you would like me to kind of pipe in on this, it'd be relatively quick, I hope.
Okay. Yeah, please.
If that worked out. I think it's kind of appropriate to get a frame of reference, where we came from, where we started from this year, and where we are right at this point, why the supplemental appropriations, where we came from. And part of this, admittedly, is a little advertisement for our town staff and to give a reference as to how good of a job I think that they're doing. And the frame of reference is when Simsbury had its busiest time ever in the past, you had 3 full-time inspectors. We exceeded those metrics in every way in the past several years with 1.5 inspectors and similar staff size. And I think that if you can reference any other feedback, again, these are the value of the staff. We've done that pretty well in compliments from commercial contractors, residents, et cetera. So where we started from basically is we've had a very busy schedule the past couple of years, and we've been able to maintain that schedule. This year, specifically in the COVID, we've exceeded those values. In the past, we might have 2,000 permits, 2,000 inspections with 3 inspectors. This year, we approached 3,000 for permits, inspections. The metrics for dollar values were, you can take a look at those. Those are 9 million plus, sometimes approaching $100 million in construction value. Where we are today is we've seen an increase in each quarter. We started out with a strong quarter at first, but we've ended up with 290 in residential permits, and this is just residential, not just the commercial side of it. And this last quarter was 318. So we've increased essentially 50%, 42%, different ways of counting it, but it's a substantial increase. What constitutes the increase? It's not just residential additions and renovations. That certainly is a part of it, and that's a steady new home construction, obviously has been substantial in this year in compared to past years. Apartment buildings, residences, you can see the numbers from community development. We're probably approaching 1,200 in the past several years, residential units. Then there are private school improvements. There have been several of those. Each one of the private schools did substantial renovations. A lot of these, the larger projects, we may see income this year, but the actual administration goes on the following year. So you might collect a fee this year and basically follow up it for the next 1.5 to 2 years. So those permits, inspections, and the work goes in. It follows the permits. That includes special projects like the PV panels, and then there are some other. Specifically, one thing that I think Jackie can attest to this is real estate transactions. We see part of that. You think, well, does the building department have to do with that? There are a tremendous amount of open permits that were out there. Literally thousands over the years have been left open. So as a part of that transaction, they like to close out open permits. So we see a substantial amount of inspections, at sometimes 2 inspections, one initial and one follow-up, close those.
And Henry, can I just, I appreciate the great detail with which you're giving us. And I think what we would like to focus on tonight, I had the pleasure of listening to your presentation to the Board of Selectmen when they made their recommendation of this supplemental appropriation. What I'd like to focus on for our benefit is not the great job that you guys are doing and the level of work, because we all absolutely appreciate that and recognize it. But why the need now in the middle of the year? Why not? Why wasn't this need forecasted when we did the budget just 6-7 months ago for a year that started 4 months ago? What has changed to make it timely to do this now instead of next year? And then so that specifically, and then one other question, and then we just speak to those.
Sure.
If this supplemental appropriation is made, we'll hire contractors or not a permanent employee. Is that correct? Is contractors?
That's the original approach. We have, obviously, the union would be able to pipe in on that, whether or not it has to be contracted services or a part-time employee. But our approach now is to contracted services, so it would give us flexibility in order to say, okay, we've gone past this hump, and now we're able to move ahead. And
so I think it makes a difference to me anyway, personally, whether we're putting in a new full-time employee that starts now or whether we're just doing so that we could actually look at that position in the full budgeting cycle. But the second part of my question is there a direct benefit from the additional staff member in terms of increased revenue because they can process more permits, or is it just that the workload will be spread over more people.
Well, you brought up it's a very important point because there are costs and then increased efficiencies, et cetera, and effectiveness. And the cost to the town, one is a budgetary cost. The other cost to a town in lack of efficiencies and effectiveness is what it costs the town because of work that isn't accomplished in a timely manner, because of a work that isn't put off, because of inspections that weren't done in a timely manner. So those costs are real. They are to the town, not in a strictly a budgetary point perspective. What we have put aside is things like, especially in COVID, is things like vacation, which everybody takes, and we understand that's as part of it, but the educational requirements that we're required to do as building officials to keep our license.
Okay, so again, I want to focus just on the here and now, because again, we're at $40,000. It's not a huge thing on a $100 million budget, but I'm trying to make the point that we want to respect the budgeting process that we go through. And when we do this, there is a way to pay for this, which would be, if we're inclined to do it out of the year-end savings from the previous year. And we actually have a meeting in October in which we would do that. I understand Mike's request that we go ahead and try to take care of this now. And I'm just really still trying to focus on
with respect to costs and benefits. And incidentally, I had a meeting yesterday with Building Code Effectiveness Grading, the ISO. They looked at us and the cost to the town. And the income side of this is our permit fees, building permit fees, as you probably know, it's a general fund item, far exceeds our department budget by multiples and has for the last 15 years. So our income has far exceeded our department budget in every case. So the fees coming in compared to the services going out, that's where the efficiencies and value comes in. And there's no dispute about that. You are well aware of that and know that. With regards to the budget process, we know that we've been tight staffed for the last several years. The increase in permits and inspections over this past year was somewhat unexpected because everybody, I think we expected it to be level. We didn't expect the meteoric rise, if you want to put it that way, with regards to the increased numbers of permits, inspections, and the ability to keep up with them. And the ability to keep up with them with regards to the budget processes, and how can I say this, there are special projects that might come in before you that you didn't anticipate, and that were anticipated over several years rather than in a compressed time. And I think that that's the point that we're at right now, is that the anticipation and our ability to handle them and what it costs the town versus the income that we've brought in with those permit fees, et cetera, I think it is very appropriate. With respect to the budget process, we did have contracted services in our budget that was diverted to some of the new updates in our software program. So some of this money that we could have used.
That's what happens with a budget, Henry. So maybe I'll let Mike. That's why we budget. You spend money here, you can't spend it there. All right.
You're absolutely correct.
Rob, actually, maybe, let me just speak to one thing. Henry kind of hit on it earlier. This uptick that we've seen in residential activity. I want to give you an example. The fourth quarter of the 2021 fiscal year. Basically, this is during the budget hearing after the Board of Selectmen approved it. We had 318 residential permits. This first quarter of July for the 2021-22 fiscal year, we've had 452 residential permits.
Okay, so there's the need. Okay.
And what Henry hit on a lot of the things. What we're seeing is COVID has brought everyone home, so they're not taking that vacation. They have been investing in their homes. At the same time, you have a very strong real estate market. And as Henry noted, you go to there's a transaction of a home, they have to close out possibly either old permits, or what lenders are picking up is, hey, you replaced the furnace in the basement. Can I see a copy of that permit? And they say, oh, no, we didn't have it. So they're coming into our department to get a retro permit, which those become, like I said, those kind of add into these numbers, which were not, if you compare it to 2 years ago, we were not seeing this kind of residential activity. And it really, it's picking up still as we, like I said, that 452 doesn't include the month of September yet. So we'll exceed.
Okay, that's important. All right,
Yeah.
so again, I want to get this out to the rest of the board and try to make a decision on this. So we'd asked Amy earlier if it's too early to have performance to plan on the unfortunately when you have a budget the way we do, we budget expenses and we estimate income. When you make an supplemental appropriation of expense, you don't get to make a supplemental assumption of revenue. That's what you're really saying here, is that the money is coming in faster than with the expenses going out. But we don't have the opportunity to do that because the money we'll only know that for sure when we look back halfway through the year and then at the end of the year. So I guess I'm in favor of doing this. I have no question that you guys are working very, very hard and that the business is up. I would very much like to see it done on a contract basis as opposed to putting in a full-time employee where then it becomes the baseline for next year. That's the budgeting issue for us. And so I would recommend, I'd be looking for a motion. I'm channeling Art. Where's Art? I'd be looking for someone to make a motion that we approve this supplemental appropriation. I would like to take it out of the year-end savings that we're going to hear about in October. Now that's good and bad because it earmarks some of those savings, and what we would usually do when we look at all those savings is have a list of things that we want to spend money on. I know there are other projects that are in line for that. I do think that this will be proven out to be covered by increased revenue that will exceed the budgeted amount of expected revenue from this department. That's what you guys are telling me, Mike, right?
Yeah, and Mr. Chairman, just to clarify one thing, we are looking for a contractual service. We're not looking for a full-time employee. This will be, we would retain the services of another, in this case, retired building official that would be contractual in the sense that they're here just to get us out of this kind of quandary that we're in with just how much is going through the building department.
So,
once the need is gone, that individual determines that the contract's over. They're no longer employed with us.
And then you'll come back to us for the budget next year with a projection for going forward and what your expenses and needs will be. Linda, you have your hand up. And you're on mute. Mute.
Thank you. I'd be happy to make the motion to provide the funding from year-end savings, but to your concern, Rob, and to your statements, Mike, to make the motion that we will pay for a contract services person. If you find you can't do that for some reason, then maybe you come back to us for further discussion, because I kind of hear some concern about building in permanent positions, because then you can't change that very easily down the road. So let's make the motion be that we'll fund a contracted position.
Maria?
So again, our preference would be for this person to be a contractor. It's possible we might have to do it as a temporary part-time employee, but again, it's not a permanent position, right? It's not a full-time person. It may be two, retirees. This is very specialized work. At most, perhaps, maybe 1 or 2 days a week of work. Again, maybe one person, maybe two people. Again, either as contractors or part-time temporary employees. As Henry mentioned, that is something we will have to work through with the union, and I can't guarantee which of those two arrangements it would be at this time. But again, it's not a full-time permanent position.
So so what I hear you saying is if it's a contractor or a temporary employee, that's someone that doesn't have full benefits, doesn't have all of the same criteria that would.
Right.
That's correct.
It can be terminated at any time without recourse.
Right.
Correct.
Yeah.
I mean, if it's contracted, I would want, no more than a 1-year contract with the ability to terminate on 30 days notice. And when you get the unions involved, I'm worried in terms of the temporary employee turning into or running into issues with, once the work is done, not, having the need for that temporary employee anymore. So if it's just semantics, I'm okay with it. But if there's, other tales that come along with a temporary employee versus a contracted person, I'd probably want to understand that.
Chairman,
while I have the floor, sorry, real quickly.
Yes.
I mean, we have ARPA funds. This sounds like a pandemic-driven cost. I mean, I honestly think, people are putting more into their homes because of the pandemic. I'd be very interested in seeing if this qualifies for ARPA funds, and then just as a follow-up, if the need is immediate and we appropriate, can we reimburse ourselves for this type of cost if we do end up finding out that it qualifies?
Question.
Let's explore that, but that I would say that would be supplemental to the supplemental appropriation. Mr. House.
Chairman, this has been an interesting and somewhat frustrating conversation. I think the need has been demonstrated, presented, and ably put forth. It's there. I got that. I also associate myself with the need for budgetary discipline and a regular procedure. We shouldn't have $40,000 be popping up in September. Therefore, I'd second Linda's motion. I think that ought to resolve. I believe that resolves the request being made. It also does so in a way that is compatible with our normal budgetary process, which I think we need to respect as we handle these things. So I'll second the motion.
All right, the motion's been made and seconded. And I don't think I have to recap it. It's to approve the supplemental appropriation for the building permit position to be done either through contract or temporary work. And it'll be funded out of year-end savings, which will be, all of that will be determined in October. Any other discussion? Lisa?
One point, if the minutes could reflect that the Board of Finance had consensus that this position should not be built into next year's budget, it would be an addition for next year.
Thank you. Implicit, but now it's all right.
Yeah, and for the priority for me would that it be contracted services if possible.
That's fine. Noted. All those in favor say aye.
Aye.
Aye. Any opposed? All right, the motion carries. All right.
Thank you.
Thank you. Next up, supplemental appropriation for Meadowwood acquisition. And who's going to present this?
Maria will take this one.
All right.
All right, and we also have Bob on the call as well. So I'll just lead off and then see if Bob has anything else to add. But we're really, really pleased that we were fortunate, and the various grants and funding from trusts, et cetera, that we hoped would come through for the acquisition did in fact come through. We just very, very recently were notified that the Federal Highlands conservation dollars were authorized for the acquisition of this project. That's about $1.4 million. The George Dudley Seymour Trust is about $280,000 towards the acquisition of the property. And you may recall earlier in the summer, we were notified of the Department of Agriculture, that's from the State Department of Ag, grant towards the acquisition. We were awarded funding. We actually just got a revised number from them. It's $11,000 to our advantage. So $11,000 additional dollars that they will be providing to us through the grant. Bob has been diligently working towards closing for us on our behalf. So again, we are working on lining up all of the funds for essentially the escrow account for closing. And just wanted to make sure that our appropriations match the grant revenue that in fact we have actually received or will be receiving. Bob, I don't know if you have anything you want to add to that.
No, that's a very good summary. We had a Zoom call with TPL this afternoon to go through all the sources and uses of funds and tie up all the details of the closing, which we hope to be ready either the end of this week or early next week. The deadline is September 30 because that's the end of the third quarter for the seller. And they would prefer to make it a third quarter transaction, which we think we can accommodate. But as these grants come in, just as you've done, I think, twice with other grants, you have to follow the process spelled out in the charter for a supplemental appropriation, which is what you're being asked to do tonight.
So let me see if because I spent some time with Bob on this, I want to just understand the need for the supplemental appropriation as opposed to doing it straightforward from the beginning. And it has to do with TPL being the applicant for the grants and then subsequently transferring the grants directly to the town. And as such, the amount of the money that we will both receive and pay for the property that comes from those grants was not directly appropriated originally, but will be appropriated now and offset by the grant. I talked to Bob about why the grants weren't originally made directly for the town, and it was part of the transaction role that TPL played in the acquisition of the property. I think going forward, we want to be as transparent and clear as we can about the sources and uses of funds for projects like this. And I know that it was all in there. It was all talked about at great length. But the net cost to the town is the same as was approved at the referendum. And this is a step that we need to do as a Board of Finance to make sure that the money that comes in is appropriated to go out for this purpose.
That's correct.
Lisa?
Thank you. I'll be supporting this because there's no change in the amount of money that taxpayers are contributing to this. But I want to follow up on Rob's point. I think we have an opportunity to be a little bit more transparent in the narratives we give for the project. This project was presented in the CIP as a $2.5 million cost to the town. It's really a $6 million offset by grants and other things. So it's important that the public understand what the total cost of the purchase was, and we could do that through the narrative section. So I just think there's a way to, and I think Rob is right, this was explained later in the process. It wasn't presented in the budget books, but later in the project. So just for the public, we were aware of this, but I think we have an opportunity in how we describe projects in the CIP, which is the primary source for our residents. That's where they go to check projects, to provide perhaps a clearer narrative of all the funding sources that we anticipate. We could have explained that it's going to TLP and then TLP would transfer the grants to us, just so the public would be aware the purchase price was actually $6 million.
All right, any other questions about this? So I would need a motion as outlined in the submission item. Hang on. So move effective September 21st, 2021 to approve a supplemental appropriation in the amount of $2,566,500 for the Meadowwood purchase as presented. The total town appropriation will be $466,500.
So moved.
Thank you, Mr. Perel. Seconded by Lisa. Thank you. Any further discussion? All in favor, say aye.
Aye.
Aye. All right, Linda.
And to unmute. Aye.
Okay. All right, great. All right, so this passes, and let's move on.
Oh, Rob, sorry, I just have one quick question. if there's a bond premium associated with this, that goes into the general fund? It's a question.
That's an Amy question.
Yeah, sorry, I was just on mute. No. So for the bond premiums, we have been reducing our overall bonding costs. So if we need, 5 million, we get $1 million premium and reduce our bonding to 4 million.
But it wouldn't be, it would be used to offset the bond, the
The issuance.
It wouldn't be used for an additional expenditure. Okay,
No.
that's all I was looking for.
Good one, Lisa. Good question. All right, having just completed very impassioned discussion about 2 supplemental appropriations, our next agenda item is the proposed draft policy for budgetary transfers and supplemental appropriations. Thanks, Bob.
Good night.
So we teed this up last month. We had, everybody had a copy of it before last month's meeting, and I do not think there were any edits or suggestions or questions in our meantime. I think that this will be a powerful tool, at least a roadmap for the Board of Finance for these kinds of things as they come up. And that doesn't mean we can't handle things on an exception basis, because that's what we do. But the laying out how a department or a fund can handle these appropriations during the fiscal year and try to manage this process, I think is the outline did a great job. And again, kudos to Lisa and Amy for helping get this to the state where it is today. So anybody want to make a motion that we approve this policy?
I move that.
I'll second.
Any other discussion? All in favor, say aye.
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 I was giving a 10-minute signal for dinner.
Me too.
Really?
I'll second.
Second dinner? Yeah, all right. Good. So now we're going to go through each policy in great detail, line by line, word by word. Not. Thanks to Amy and my request last meeting, just to tabulate where we are on the policies that we have, when they were last reviewed. I agree completely that we're in pretty good shape. I think you can just simply by the date on these, there are a couple of them that need some attention in the intermediate term, not the next 30 days, but that we will put them on the top of the list of things to work on. And again, I think we're managing this so much better than when I first came on the board some 6 years ago. I think Linda remembers that we were way, and Kevin too, way behind the 8 ball. So, and I take no credit for it, except that, we've watched it happen, which is great. Anybody see anything else in those that they wanted to speak to? All right. The minutes looked okay to me. Any comments, nits, or changes?
None.
All right, so let's just have a vote to adopt the minutes as submitted.
I move adoption.
Yeah.
Second.
All in favor, say aye.
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 Anything in particular? How's that building department doing? Are they busy? Are they doing a good job? What's the revenue look like? Awesome. Anything to highlight though, Amy, that you wanted to on any of those, or okay? So who gets to move adjournment?
Just one question. This on the agenda, it said Board of Finance regular scheduled meetings. There was nothing. Is there nothing in October?
Why would that be?
No, that's just an error. There's a meeting.
Okay.
Sorry,
All right.
Kevin.
That's okay. Just checking. I second the motion to
Spoken by
adjourn.
somebody who has only a couple more meetings. All right, noted. All right, was moved. Somebody seconded. All in
Second.
favor, say aye. Let's have it. All right. Thank you, guys.
Right.